Hi guys, welcome to Trading in Zones. Today, as part of our indicator series, we'll look at Ichimoku indicator. I've gone through and I've made a good blog. We'll be posting this online on our website as well. So we'll quickly look at what this indicator does and how this indicator really works. So let's straight head into the indicator without wasting too much of time. Understand how the indicator works and what are the things what we can really look at. So one of the first aspects what I've looked at in the indicator is that there are multiple lines which are the blue one by default on the trading view when you put them is the conversion line, the brown is the baseline, and then there is a leading span and a lagging span, and also there is a 26 period lagging indicator which comes up, which I've actually hidden, which comes up as a green line. Yeah, there you go. This is the lagging indicator. So you have the leading span A, leading span B, and the Ichimoku clouds which come up based on that. So let's quickly look at the formulas in terms of how it works. So the conversion line is actually a 9 period high and 9 period low by 2. When I mean period, this is purely based on the timeline what we have. So if you are using a time frame of 5-minute chart, it would look at last 9 candles, and similarly if you are looking at a 15-minute, 1 day, 1 hour, whatever chart you're looking at, it would look at the last 9 candles. That's why this is called as a 9 period chart. So the conversion line is nothing but a 9 period high and low divided by 2. So this is technically looking at the midpoint, which is very interesting because this is not very similar to an average which comes up. But yes, this is kind of the midpoint of the high and low. So it takes out the center value. Similarly, the baseline looks at a 26 period high and low. These things can be set to different periods if you want to. So but the default settings is what I would recommend you to use until you get a hang of using the indicator. So a 9 period high and a 26 period high low is considered. 9 and 26 period high low is considered, and the midpoint of that has been considered. Leading span A is nothing but the midpoint of the conversion line and the baseline, which is a further calculation. So it takes the 9 period high low midpoint, takes the 26 period high low midpoint, and then divides that by 2 to get the leading span. And leading span B, so this is like a 52 period high and 52 period low, so it goes back as far as 52 candles depending on the time frame what you're using again, and takes the midpoint of that. So when you look at it, this is the most slowest, the next slowest is this, the fastest is the 9 period, which is the blue line, and the brown line is the next fastest, which is the 26 period. So like any other moving averages, when you see a crossover, the cloud becoming smaller and going below the candles, and the candles crossing over the clouds, and clouds also expanding and becoming greener, is a great signal for anyone to stay long on a chart which looks like this as per Ichimoku, because the Ichimoku technically says that when you have when you come to the implementation part of the blog, where I've mentioned that there are two ways to identify the overall trend using the cloud. First, the trend is up when the prices are above the cloud, down when the prices are below. So I've put some chart examples here as to how the clouds come down. Similarly, there are quite a few choppy situations where the candles are in between the cloud and the cloud is also running flat. If you see here, this period is something which has not happened as of today, right? But this period you can still see the clouds are here, so that means that this could be an indication of how the future 26 period is gonna look at, or future 9 period is gonna look at. So what the cloud does is it also kind of gives us a projection in terms of where this is heading and what could be an appropriate what could be a approximate price based on the historical data what it is calculating. So that's one thing different with this indicator, where it gives you a slight projection. And also the other observation, if you make, whenever you see the leading span crossing over the second leading span, which is the 52 period crossover which happens. This is also a signal of a downtrend and the cloud turns red. Similarly, when the average of the conversion and the baseline crosses over the 52 period uh, leading span B, this is called as leading span A. So when the leading span A takes over and comes on top, that is an indication of a up move. Again, these are completely dependent on what time frames you are looking at. The calculations will completely change based on the time frame what you look at. So you need to use these indicators to understand how they work. They give some great entries when you see crossovers and on trending stocks. So one of the key things while using the indicator is you need to look at how the overall span of the proper bullish movement usually comes, not just when the 9 period is crossing over a 26 period, but also when the midpoint of 9 and 26 period crossing over the 52 period happens. That is when it is kind of truly bullish and it acts as a strong support as well. So if you look at this as a chart, there is huge amount of consolidation phase where you can look that it is very choppy. But when you go to any kind of trending phases where you see a good trend up or good trend down, this would have given a great indication in terms of how and when. So you can see the cloud expansion happening. That means the faster moving average is way far away compared to the slower moving midpoint. I wouldn't say average, I would have to say this as a midpoint because this is not an average calculation. So when there is a huge difference like this which happens, that is also because the price is significantly coming down and hence the cloud kind of spreads. And this also happens when the price increases way too high. So you can see, on a single candle the price has gone up significantly, and that creates the expansion of the cloud, which also creates kind of a support. But as it starts coming down, it also has come down big, which is a kind of signal for us that once it starts trending down, the same cloud or the same levels of pricing will act as rejection, and the downward trend continues, and you can see that the cloud is acting as resistance in multiple places. That's exactly what the Ichimoku does. So a great indicator while it is trending. You can enter on pullbacks for long, and also you can enter on rejections when you're doing shorts. So when it has fallen down, you can expect these levels to act as rejections. So anywhere here you enter as a rejection, you'll have a very small stop loss right above the cloud, and you can take an entry. So that this is how the Ichimoku cloud works in short. The 26 period lagging indicator is more for you to give a direction in terms of what's happening, and the lagging indicator calculates the price based on closing of the candle. So if you go to the latest, you will see that this is not something which will give you an indication as of the last candle. This stops right over here because it is just calculating the 26 period closing base prices. So based on the 26 period closing base prices, the price somewhere closed at around 799, which is nothing but 791, which is nothing but the closing price of this particular stock for last week Friday. So that's about it. Look for the crossovers and look for the support of cloud. When you're looking at it, the lagging indicator is good. The lagging indicator is more of a directional indicator. If this starts moving up, that also means that as the price is changing direction, the last 26 period direction is changing, so it starts moving up. As it starts moving up and also the crossover happens and the cloud, so this kind of gives you multiple confirmations to stay in the trade, to say that this trade is moving up, and you can stay long having your stop losses and enter when the candles cross and move above the cloud, or enter when the cloud actually kind of turns green. So mostly this coloring combination is because of the faster moving leading span A crossing over the slower moving leading span B. Similarly, the conversion line is a faster moving period compared to a 26 period brown line, which is the baseline. So these are just given different names, founded by the Japanese guy who was a journalist. So read the blog, have fun. This is a great indicator to use if you get a hang of it. Clearly gives you a prediction of how the stock is going to move in future based on the midpoint calculations it does. That's about it for today. Have a great Sunday, happy weekend, and have a great trading week ahead. Bye.